Ladies and gentlemen, welcome back to the Crypto News Podcast. Your host here, Matt Zayab. We are buzzing as always. Beautiful day in Toronto. We actually have a bit of a cold front today. It's been like legit high 30s every single day for my American listeners. Sorry guys, the whole world runs on Celsius. I know you guys love your Fahrenheit. Also though, I will say Fahrenheit sort of makes more sense, just in the sense of you have like a more specific sort of temperature gauge, if that makes sense. But on the flip side, it just makes no sense you guys use it. But anyways, I still love you. Super pumped to have today's guest on the show, the one and only Ryan Galvankar on the show today, founder of Plaza Finance, a company at the forefront of DeFi innovation, and Opt.fun, a decentralized options trading platform. He's based in New York, and his career began in TradFi as a trading and investment analyst at the Bank of America and Mangetar Capital. Hope I pronounced that right. He then established Plaza Finance to introduce groundbreaking concepts such as programmable derivatives. We can get into a whole bunch of this fun stuff, but we're going to get into Opt.fun, which caters to younger audiences and lets you literally bet 60-second at the money options with up to 1,000x leverage. Super interesting stuff. Ryan, welcome to the show. Pumped to have you on.
Thanks for having me, Matt.
Pumped to have you. How much of a struggle bus did we have with the audio? Oh my goodness.
It was 100% my fault. But yeah, it was a rough time getting headphones that sounded decent. So thanks for struggling through that with me.
Yeah, you got it. Nowhere I'd rather be. Let's talk about New York. I was in New York 3 weeks ago. Best city in the world, not up for discussion. It's incredible. The crypto scene in New York is all world. When we started the podcast in 2021, early 2021, it was a ghost town. The few founders that I had on from New York were saying, yeah, Matt, I'm heading to Austin. I'm heading to Miami. I'm heading to Cayman. I'm going to Bahamas. I'm going to Singapore. I'm going to Dubai. It seems like the script has fully flipped. Everyone's back on the New York train. How much fun is New York right now? And how buzzing, Ryan, is the crypto scene in New York present day?
There's no better place to be in the world if you're a builder in crypto. So when I first got started in the space about a year and a half ago, this was pre-Trump. It was Gary Gensler's SEC. Every crypto founder in New York was talking about potentially leaving for Singapore just because the regulatory environment was quite harsh. Now everyone's talking about moving to New York, which is awesome. It's nice to have transitioned from being viewed by the government as a potential criminal to being viewed as someone driving strategic technology forward. So the crypto scene in New York is excellent. I would say Miami still has a higher concentration of marketers and like meme coin fun activity. But in terms of pure builders, people who are pushing blockchains forward, New York is absolutely the place to be. I'm actually calling you from Interchain Labs, so the main Cosmos Foundation's office. Good friends with the founders. But down the street is Uniswap. Down the street is Stride. There's like every crypto company has a presence here. So in terms of meeting investors, meeting other builders, they're all flowing through New York. And it's really interesting in that there are some bigger companies that actually like pay for pretty big offices. But if you're just like a solo builder or a small team, you can kind of crash in their space. And it's like fun to be around other people who are pushing the limits of what blockchains can do.
Wow, I love that. That's electric. Mayor of Toronto. I mean, Olivia Chow, wakey. Let's do the same thing here. Let's get this scene buzzing. That's not going to happen though. That is a pipe dream. Okay, Ryan, I want to jump right into, I know Plaza, I guess we'll do Plaza first, but I really want to get into Opt.fun. Before we do that, walk me through the thesis, the overarching thesis of Plaza, which to my knowledge is the parent company, and Opt.fun, consumer-facing company for lack of better words. But if I were to put words in your mouth, and I am here, so I apologize in advance. The thesis is sort of the hyper-financialization of everything. People want to trade options. They want to trade derivatives. They want to use leverage. And they don't want traditional options in TradFi in the stock market where you got to use volatility and you have to use dating mechanisms and you got to pick a date. It's not that fun. They want to be able to do that quick and they want to do that easy, hence Opt.fun. Walk me through your thesis of why you created these things and then we'll get into the fun stuff.
Yeah, so Plaza Finance and Opt.fun are actually two completely different projects that we've built to address two different needs in the blockchain space. So Plaza is kind of where I got started in the blockchain space. So programmable derivatives, or our core innovation, it's basically the ability to take any asset like staked ETH or even like a real world asset and split the returns of that asset into different profiles that are better suited for different types of investors.
Mm.
The core underlying observation we had was when we were looking at the spectrum of financial products available on blockchains and financial products available in traditional finance. In traditional finance, you had a really wide range, everything from treasury bills to extreme amounts of leverage. Everywhere in between, there was a product that was available for investors. On blockchains, we saw that there was basically like you could hold stable coins on the blockchain, and then you could do a bunch of really insane, degenerate things. And the majority of finance happens in the middle of this spectrum with things like corporate bonds, structured products, things like that. So we wanted to create products that were kind of better suited for the middle curve of investors. So the ability to take ETH and make a bond backed by ETH for people who want stability and yield and can't stomach the volatility of ETH. Maybe people want more leverage than ETH, create a sustainable leverage product for them. And the vision was kind of disintermediating the global investment banks from the process of risk structuring. So all of this financial engineering that happens in traditional finance happens through a few key giant banks. So people like Goldman Sachs, Bank of America, Morgan Stanley, all of these institutions, an asset originator comes to them and says, hey, like we need to finance these assets. And they split those assets and the returns to different types of investors to get better execution for those investors and meet investors with different risk profiles that are suited for what they're tolerant for. We wanted to do this on a blockchain in a smart contract so that you don't have to pay Goldman Sachs $10 million to kind of finance your assets. You can do it permissionlessly on the blockchain. And instead of like paying fees, maybe earn fees for contributing your assets to such a vehicle. So that's what we built with Plaza Finance, a mechanism for transforming risk and return in a decentralized way. We've launched a couple products on Base. One is Bond ETH. It's a bond backed by ETH. We started with crypto native assets. The plan is to move more into RWAs with this kind of financialization engine. But Bond ETH is a product for people who want dollar yield backed by ETH and something more stable. And then we have Lev ETH, which is levered ETH without the risk of liquidation. So Lev ETH investors effectively borrow some ETH from Bond ETH investors to go levered long. It's built to be a product for if you're really bullish on ETH over a long-term time horizon, maybe 5 or 10 years. If you wanted to put a levered view on with perps, you'd get liquidated. But with this structure, you can maintain your exposure even if the market falls in the short run.
Interesting. Okay, so you're still letting people degen. It's just like degenning with a little less risk.
Yeah, I would say that's the leverage side. It's for long-term believers in ETH who are like really excited about the technology, but don't want to worry if like ETH price falls 50% in a day because some government imposes some regulation. They won't get blown up and stopped out of their trade. If they're playing for a 10-year or 20-year horizon where ETH rules the world, then this is the product for them.
Gotcha. Okay. I want to take just a quick step back here, Ryan. Programmable derivatives. This is something I'm very bullish on, for lack of better words. A lot of just even the folks in my network have come back to me. Matt, I'm trading options. I hear about Hyperliquid. I hear about, futures. I hear about derivatives. I hear about on-chain options platforms. What makes it better than traditional options? Again, I'll use the easiest example of going on Robinhood or Wealthsimple, Canada's version of Robinhood, firing up your options account and taking out some options. You got to deal with the vol and you got to deal with the dating. I'd love if you could walk me through the process of not only just creating, but using and trading on-chain derivatives and how it's a much easier product, much simpler, much more efficient than sort of TradFi options platforms.
Yeah. So with Plaza Finance and programmable derivatives, it was splitting the risk return of assets to any profile that's suitable for any different type of investor. And those products are very long-term focused for people who are making wise, deliberate capital decisions. We realized that a lot of people in crypto today were actually looking for quick wins to get rich quick. They were chasing a lot of volatility, and you see that expressed in the meme coin market. So after we built Plaza, we were thinking about how can we craft a super short duration, because people have low attention spans, extraordinary high volatility product that's on a fair venue, where it's unlike the meme coin platform where like if you're not part of the insider group of launching a token, you're the one getting dumped on. And the way we came up with how to do that was to build ultra short expiry options on Hyperliquid. And we launched that product as our second product after Plaza Finance. It's called Opt.fun, where basically you can take on about up to 1,000x leverage for 1 minute. So Plaza Finance, super long-term focused investment products. Opt.fun, extremely short-term degeneracy. We launched it about a month ago, and in the first month, there's been about $1 billion of trading volume on Opt.fun in these ultra short expiry options. But the core thesis was we wanted to create a venue where you could take as much volatility as you wanted to make or lose a generational amount of money. I don't feel like you should be limited in your risk taking by regulators. I think if you want to take a lot of risk, you should be able to take a lot of risk. So we built a platform where you could take an extraordinary amount of risk and either hit or lose all your money. And that's kind of the fun in it. So that's what Opt.fun is about. So Robinhood popularized short expiry options. Their options are 12 hours, which is extraordinary amounts of volatility. And like even the TradFi guys I used to work with stick up their nose at 12-hour expiry options. We did a minute, which is just like the most ridiculous next level of
how do you program that? How do you make that work?
Yeah, so fully on-chain options order book, where we have to be quite quick about liquidating people if their collateral falls below the requirement of 0.1%. The underlying assets here are extremely volatile. It's Bitcoin right now. It's Bitcoin and pump. So
but if it moves, if it moves, sorry to interrupt, if it moves in the other direction, like at all, you're toast, right? Like you literally have to time this perfectly, pretty much.
If you're using 1,000x, yeah.
Okay.
Most users use around 200x because they found that that's like the sweet spot of where you could like actually look at it for like a minute and like not blow up. If you slam it to 1,000x and in 2 seconds you either made a lot of money or you're like completely liquidated, which is fun. It feels kind of slot machiney, but like I would say the most active users are using between 2 and 300x because that's a sweet spot where you can like actually do things like before the price goes down, you can like catch yourself. But yeah, it's extraordinary amounts of volatility. We think that trading moves short form in the same way content did. Like we think people feel a sense of lack of opportunity in the current economy, and being able to take on a lot of volatility on a fair options order book. You can run intelligent systematic strategies, or you could just gamble. Either one is fine with us, but it at least gives you the opportunity for big wins.
I mean, and it's both sort of gambling at the end of the day when you look at it, right? It's just one's like a much more strategic, level-headed level of gambling, and the other is just purebred degeneracy in the best way possible. So, I mean, you guys are definitely.
Actually, I think Opt.fun has two types of users. There's the extreme degens, the gamblers who are like, let's see how big of a win I can get by gambling over 1 minute, and then it's like the most quantitative, like nerdy folks alive. So I used to be a quant trader, but basically people building systematic strategies around a permissionless 1 minute expiry options order book. So one thing that's quite interesting to think about and why we built it on top of options is options are like pretty well studied financial products. The 1997 Nobel Prize in Economics was won by these two researchers who came up with a succinct and correct formula for pricing an option. So there are market making type folks who are running bots where they're like, I am putting liquidity on this order book and I'm bidding at a discount to Black-Scholes. And if I hedge it properly on Hyperliquid's, let's say, perps order book, then I can run a strategy that systematically makes money. And then on the other side of that trade are people who are gambling. So there are like non-gambly ways to use Opt.fun that a lot of people are kind of like using. But I would say the more fun way to use Opt.fun is to just go 1,000x long and hope that it hits.
Wow. Okay. What about no KYC? Anyone can log on, available worldwide. Walk me through that.
Yeah. So we do have to geo-block US users. So US users don't use it unless you're traveling abroad. Our goal is to build a permissionless on-chain financial product. So anyone kind of regardless of whether they're in the US or not can interact with the blockchain protocol. We just can't, because we're a US dev team, we can't service you with our front end because of regulations. So like the goal for building a decentralized on-chain options order book is to aggregate global liquidity on a single venue. And that gets everyone better price discovery, 24/7 trading, full transparency. So there's all these good attributes to putting like options exchanges on blockchains. And we think the way to start building this truly liquid on-chain options order book is to start with a really fun degenerate retail product. Like we've seen a lot of people try to build options dexes in crypto. Like this was like in 2021, I could probably name 10 different options trading protocols that raised tens of millions of dollars to go build options on the blockchain because it just makes so much sense. But what they realized is that they would go and like build this really fancy trader UI and like bribe a bunch of market maker liquidity and then launch the protocol, and then no one wanted to use it because like options are actually like quite complicated to like fairly price. And for rightfully, like the people who are like trading options are generally like very quantitative folks with like a deep financial background. But if you abstract away a lot of the complexity around options and make it a more fun kind of gamified experience, then options are a lot of fun to trade. And you don't need to know a lot of these things to have fun from a gambling perspective. I think you need to know these things if you're like trading and like using real amounts of money.
Agreed.
But like if you just want like a quick fun, options are a great platform to build that off of. So we view kind of building this like ultra fun options exchange as kind of a stepping stone to building liquidity around an on-chain options order book that's from the ground up and not from bribed market maker liquidity to dumping a token down. And we think this is like the much more sustainable way to build it. And a lot of our notes on how to build it came from watching Hyperliquid build the best perpetual futures exchange entirely organically. So we're quite excited that like we've driven a lot. I would say we're like more than 50% of the last month's on-chain options trading volume. So we're quite excited that this approach is like resonating with users. And our goal is to scale it to the entire CBOE of volume on options. So right now we did 1 billion in a month. The CBOE probably did 10 trillion. So long way to go in terms of growth.
Wow. That's wild. Okay, Ryan, you're on the heater right now. We've got to take a quick break, give a huge shout out to our sponsor of the show. When we get back, we're going to keep buzzing. And we're going to buzz on Hyperliquid and why Ryan and the Opt.fun team chose to buzz on Hyperliquid. I mean, I'm biased. It's a no-brainer, but I've got to hear Ryan's side of the story as well. Until then, huge shout out to our new sponsor of the show, EMCD. Huge shout out to EMCD, our new sponsor, all about empowering people. Doesn't matter if you're a miner, a trader, investor, digital nomad, you name it. They've been in the game for 7 years, starting as a scrappy Bitcoin mining pool that broke into the global top 10. Fast forward to today, and they're building Web3 fintech tools to help you grow your assets without needing to ride every market wave or nail every single trade. Think of EMCD as the all things in one crypto app. It's finance that feels human again, designed for real goals and not just tracing trends. We'd love to see it. Check out what they're building at emcd.io. Again, that is emcd.io. Huge shout out to EMCD. And now back to the show with Ryan. Okay, that was every time I do a new ad read, I'm always like, oh boy, don't mess this up. But we're back. It's funny. Like you read things all day, and then when it comes to an ad read, sometimes I forget how to talk. Anyways, okay. Hyperliquid. I'm biased. I love Hyperliquid. I think Hyperliquid is going to continue to dominate and destroy Coinbase and Binance market share. It's just candidly a better product, and it doesn't matter what type of vertical or niche or bucket of life and commerce you are living and thinking in. If you can give someone something that is cheaper, faster, and better, they're probably going to go use that thing unless they have some crazy long relationship. You know, you go to a barber, maybe the barber isn't the best, but he's your guy. You're going to keep going to him. But for a lot of most things and other things in life, you give someone a better product, they are going to use it. And that's what Hyperliquid has done. Was this a no-brainer to build on Hyperliquid from the get-go, or did anyone else even have a shot at grabbing your business?
So Plaza Finance, we built on Base. And we have a view that like Base is going to win a lot of the consumer sort of social parts of the decentralized financial system. But in terms of trading activity, there were two places that we were excited about. It's Solana and Hyperliquid. When we looked at both of them, Solana clearly the winner in meme coins, like huge amounts of volume.
100%. 100%.
Hasn't migrated beyond that, though they have great infrastructure, very reliable chain, very fast. We looked at Hyperliquid. Their core perp stacks is extraordinarily well built and extremely performant. Hyper EVM, relatively new. So Hyper EVM is their general purpose blockchain They launched it earlier this year. Long way to go before I would say it's like a real Solana competitor. But there's a couple key attributes that we liked about Hyperliquid that made us fully sold on their vision. So one, Hyperliquid is starting with a core product that is clearly good and clearly works. Their perps exchange is by far the best perps exchange. It's permissionless, it's on chain, has the deepest liquidity. So for a lot of assets, even spot assets, Hyperliquid is like now the most liquid venue, and liquidity is everything in for traders in terms of execution. It's why people for a while have traded on Binance, despite the fact that there have been issues with them shutting down people's accounts and like reporting requirements, all sorts of issues. People continue to trade on Binance because Binance for a long time has been the most liquid. So Hyperliquid is starting to make dents there. Low fees, permissionless on chain. We like their perk sticks. With Hyper EVM, we saw that they were building a general purpose L1 where they were hoping to house the future of finance. So they have a very purpose-built perpetuals exchange, and then they have this general purpose L1 that they hope unlocks a flurry of new financial products with key tie-ins to the perpetuals futures exchange. So one of the things that you can build uniquely on Hyperliquid and nowhere else is an on-chain option to order book where the spot price of Bitcoin is from a permissionless on-chain venue. So we use Hyperliquid's like read and write precompiles to look into the Hyperliquid order book to get the underlying price of Bitcoin and pump and all these other assets that we built options on top of. So Hyperliquid like allowed us to do that. They have no interest in building options. They like perks. We like options because they're the only way that people can like uniquely trade on volatility. So they basically gave us a green light to win the options market and build it on Hyperliquid so that Hyperliquid as a whole can house all of the future of finance. And that was a pretty exciting pitch. With Solana, you have like the meme coin sniper users, which are great. And we see a lot of them migrating over to trading on Hyperliquid now that meme coin volumes have fallen. But with Hyperliquid, you have this cash rich community that all got a massive airdrop of very active traders ranging from the most quantitative to the most degen.
Yeah.
And both are kind of our core market. So building as close to that huge pool of liquidity and where all those users are happy to be is the right place for us to get started. I would say the Hyperliquid community is like extremely like Hyperliquid or nothing, which I think is great. It really like helps you find it as a builder, like it's always a hard problem to find your first like 1, 10, 100 users. But with Hyperliquid, if you want something on Hyperliquid, there's a group of people who are willing to try it because there's some market expectation for the next hype airdrop going to users of the Hyper EVM blockchain and on all the protocols there. So all these aspects really sold us on Hyperliquid. We also like the fact that there no VC capital raised by Hyperliquid, so no one to dump on you. The team is hyper ethical and like extraordinarily smart. So we were at a point in kind of our blockchain journey where like we were looking at all these like VC L1 pump and dumps, and we are like, wow, there's so much garbage being put out into the world. And then there's Hyperliquid as like this bastion on a hill, like the ethical chain that has all the liquidity and like did not touch VC dollars. And we were like, that's where we want to be. Like that's kind of ethically and philosophically aligned with where we think the future of finance goes. And we're excited to contribute to the Hyperliquid ecosystem.
What a story. Did you get a chance to chat with Jeff and the team? Like when you said they let us do this?
Yeah. So we talked to Julian from the Hyperliquid team pretty much every day. Jeff is too busy in his research dungeon building cool shit to talk to me. But one day Jeff and I will meet. But yeah, like we talked a lot about kind of where they hoped the ecosystem would go and like what they were prioritizing in terms of finding builders to do. And I think one of the things that they were quite axed on was options, but they didn't want to build it themselves. So I think Jeff, sorry to speak for Jeff. So Jeff, if you're out there, feel free to correct what I'm about to say. But I think Jeff's view is that perps are a fundamentally better product for leverage trading an asset than options, which I think is true over when you're talking about small amounts of leverage, meaning under 50x, and you're talking about longer time horizons. Perps are a great product. They're linear, they're simple. All you need to do is slide the leverage scale and click long, and
Done.
You're good to go. With options, there's a bunch of things that you have to consider, like options premium and things like that. But for extremely short-term trading and extraordinarily high amounts of leverage, I think options are a better product because they have this like finite expiry where positions are closed out to give you kind of instant feedback of like, did you hit or not? And also allow you to take so much leverage on because of this instant closing attribute. That's why we built our product on options. Options are also a great way for you to just trade on volatility. With perps, you can't trade pure volatility. You always take like price risk, but if you wanted to place a bet on pure volatility, options let you do that. So we think options are a big and durable market. I'm sure a lot of the like leverage trading market will be consumed by perps, and I hope it happens on Hyperliquid. But there will always be an extraordinarily large market for trading volatility, and we were excited that the Hyperliquid team was excited for us to build it on their venue and had no plans to compete.
That's awesome. Great story. Right, a couple more questions here. The tokenization of assets. This is something that you're big and bullish on. Likewise, you and I definitely sit in the same bus here. I don't think it's going to happen as quick as a lot of folks in our ecosystem think, but I do think, in fact, I know that it's just a much more efficient world living on chain, even though we still need to get our ducks in a row and fix a lot of things, which we can or cannot get into on this pod. That will make for a much longer pod. But as we continue to grow and as we continue to build better infra, there's no reason why ecosystems like Hyperliquid couldn't be the house of all finance. With that being said, why are you so bullish on the tokenization of assets? And do you see any sort of micro or macro trends popping up over the next couple of months?
Yeah, I'm bullish on the tokenization of assets because, well, how I became bullish is a little bit roundabout. I used to not be bullish when I worked in TradFi. I thought this was like largely all of scam because when I worked in TradFi, like I had access to every product available. Like when you're working for an institution with billions of dollars of capital, you can access all the retail products, and then you could access the big boy products that are only sold over the counter.
Yeah.
So like I didn't really like have an understanding of like the fact that the majority of people in the world like do not have access to the same financial products as I used to have access to. My fiance is from Kazakhstan, so I went to visit her family in Kazakhstan, and I found out like how hard it is to just like buy one share of a US stock. Like it's basically like unavailable unless you're like ultra high net worth, which is just crazy to me. So the next stage for capital markets is like you should be able to invest anywhere in the world into assets that are high quality. So if you want to invest in US companies because you think they're the best and you're in Kazakhstan, you should be able to do that. And if you're in the US and you think a company is really interesting in Kazakhstan, you should be able to do that. So I think like tokenization open and putting things on permissionless blockchains opens up this like free capital flow where anyone in the world can have access. Like I don't think these things should be gated by governments or institutions. So I think that the dominant trend is we're going to see a lot more tokenization of assets. It's good for the asset originators / asset holders because it opens up a big buyer base.
It's good for
it's
everyone.
Good for investors. So it's a no-brainer. The only person it's bad for is the global investment banks that sit in between and like gatekeep this access for kind of
exactly. It's bad for the middlemen. It's bad for the middlemen. Just like what you started, just like how you started the show when you were talking about how sort of finance works with the Goldmans and the Barclays and the whoever. Think about what's happened with the crypto IPOs over the last little bit. Companies who IPO at, what was Circle, like $38 a share, I think, and then it opened at, 105 or something? Where's that spread going? It's going to the folks who run the roadshow. Like, what the heck? You know, how much money is lost on the founders and the team itself, and then how hard does retail get hooped? It's like it's a double-edged sword of mayhem. It's terrible. I can't wait for all this to get fixed.
The IPO debauchery over the last few big IPOs is definitely a case for like fair launching on a blockchain instead of doing a roadshow process. But I digress. Tokenization is going to kind of continue. I agree with your take that it's going to be slower than people think, simply because like the regulatory process is sometimes good, sometimes bad. I think in this case, it is both good and bad. Like you want to make sure that people are not like doing weird things by putting stocks on the blockchain, but at the same time, you want to make sure it happens. So that process is going to run its course. Clear regulations are kind of rolling out over the next 6 months, at least to the US, and then other places around the world, it's going to follow. I think like the natural tension point is US regulators are like worried about investor protections, which is good. And then overseas regulators are concerned about capital flight to this like on-chain economy and US companies, because otherwise their currencies and banking systems become less valuable if people can access this like really great one that's on the internet. So like you have all these tension points that'll make things happen slow. I think it's really exciting to see Robinhood come out and say we're doing tokenized stocks
Yeah.
because one, they have a big trust, big retail following. They're capitalized to push it through the regulatory sludge pipeline. But yeah, I think to date, we've only seen like low quality, like Dubai real estate that no one wants to buy exist on blockchains. So I'm
100%.
quite excited to see what can happen with higher quality assets on blockchains.
Last point and we'll wrap up. And this could be a hot take on my end here, Ryan. I do think over the next couple of years, we will see a company that is massive, that has nothing to do with crypto. And I think they will forego the traditional IPO route, or at least the go public route. And imagine listing on a blockchain and saying, hey, this is how we are going to go public. I think that would melt faces. Right now, it still doesn't make sense. There's so much more liquidity. There's so much more distribution. Again, I say distribution. There's less distribution from a geographical perspective, but more distribution to capital going the IPO route in the States. But the first company to do that, I do think that could literally melt faces and change the game forever. If that happens.
I'll go one step further and say that's going to happen on Hyperliquid.
It's going to happen on Hyperliquid.
Yeah. I think someone is going to do a spot token launch on Hyperliquid spot order book instead of doing an IPO. And
they're gonna spend the $30K, grab the ticker.
$30K to grab a ticker, or
I know.
Pay Binance $1 million, or go pay Goldman Sachs $10 million. Like it's a no-brainer.
I know. Okay, for just so we can have a hot take timestamp. If this happens, folks, we'll have to do a giveaway, and Ryan will be like, I don't know what we're going to do, but we're going to make a statue of Ryan and put it somewhere. Give me a month and a year for when this is going to happen.
Now this is hard.
Give me a quarter.
When a non-crypto related company does the equivalent of an IPO, but like on Hyperliquid spot order book.
On Hypercore.
I'm going to say Q2 2027.
Q2 2027. All right. That's like 18 months away. That's wild. All right, folks. Q2 2027. This was a great episode with Ryan. We'll have Ryan back on again before then, but we will definitely have him on in Q2 of 2027. And if that pops off, holy crap, statue time. Get the marble out. We're going to build a big old statue with Ryan with his flow, with the Apple AirPods on, the glasses, the whole 9 yards, the beard and everything. Ryan, what an happy. Really appreciate you coming on. Before you leave today, can you please let our listeners know where they can find you personally and, of course, Plaza Finance and Opt.fun online and on socials?
Absolutely. You can find me on Twitter at unhedged21. You can find Opt.fun at opt.fun. And then you can check out Plaza Finance if you're a more long-term focused investor on plaza.finance. And my one ask is that I do get the statue if it happens before Q2 2027. What do you think?
Down. Got it.
Okay, done.
Got it.
Deal.
Okay. Folks, what an episode with Ryan Galvankar, founder of Plaza Finance and Opt.fun. What a nappy. We touched on 60 seconds options trading on Hyperliquid, deep dive into Hyperliquid, which you guys know I love, of course, programmable derivatives, the tokenization of assets, and a little bit of everything. Huge shout out to Ryan and the team for making this happen. If you guys enjoyed this one, I hope you did. Please do subscribe. It would mean the world to my team and I. Speaking to the team, love you guys. Thank you so much for everything. And back to the listeners, keep on growing those bags. Go touch some grass. It's the summertime and it's wrapping up soon. And above all else, keep on staying happy, wealthy, and healthy. Love you guys, and we'll see you on the next one. Ciao.